Hey everyone, welcome to the House Blend. I'm Nash Middleman, your host, where we talk about Bay Area real estate tips, trends, and collaborate with some top professionals in the industry. Today I got my friend Matt Sharp, sales manager with New American Funding on, and we're going to be talking about affordability and creative financing in the lending world. So thanks for being here, Matt. A little bit about Matt Sharp too. He is nationally ranked top 1% the last 5 years. Recently qualified for the President's Council with New American Funding, even though he's only been there the last 6 months. He also did the mortgage on my house. So I'm excited for you to share some good insight with us today.
You
We
just
go way
had
back.
to do you just had to do that to me, didn't you, Nash?
we go way back. Yep, you and I.
Yeah,
So
good to see you, man. Thanks for having me on.
yeah. Thanks for being here. Um, Also, this is the House Blend Real Estate Podcast. Are you a coffee drinker?
I love coffee.
What's
Two or
your
three a day for me.
Yeah? That's like par for the industry, I think. But I have to give myself a plug here. I was in Japan the last 2 weeks and had some really good coffee at this place called Glitch Coffee, which is what I'm drinking today. And also just want to give a shout out to my clients who live out there, clients and friends who gave me this mug that I'm currently drinking my coffee out of. So Glitch Coffee, I'll post them on the gram. And what's up, Kenji and Ashley? Thanks for buying me dinner the other day, and good to see you guys. But now that we got that part out of the way, let's talk some lending. And for this series, with affordability being such a challenge in the Bay Area and the housing market across the country, was really eager to get your insights about what trends that we're seeing in the market, where you see the interest rate market going, loans market going, and maybe some like creative financing niche products and tidbits that you want to share with all listeners here. We'd appreciate it.
Sure. That's a big question. So I'll do my best to kind of break it down. So affordability is a huge thing right now, especially for existing homeowners, people that have bought their homes, 5, 10 years ago or more, and they were locked into their 2 or 3% interest rates, and now they're thinking about a move. And usually it's because of something changing in their life, like they're getting married, they're having kids, or some sort of life-changing event that is prompting them to move, or maybe they need to get their kids into a new school district, something like that, right? Like, but a lot like the challenge they're facing is jumping from that 3% interest rate up to 6.5, 7% interest rate with today's interest rates. And so for a lot of people, their housing payment will double for a lot of their moves. Not everyone, of course, but for some people. And that's kind of a tough pill to swallow for a lot. And so, that's kind of the conversation that I have pretty often is, basically why on earth would I go from paying 4 or 5 grand a month in rent to $9,000 or $10,000 with a mortgage payment and owning a home? It just seems crazy. And so when you're able to have that conversation with someone about it, talk to them about the housing market, like what it boils down to is if someone is buying in an area that is where homes are appreciating value, a highly desirable area, and we know the home values are going to trend up over time, it actually can be a really great investment for them, even if they're doubling their housing payment. So that's like one of the ways that we sort of tackle a lot of the hang-ups, or like where people get stuck on affordability, and that's just kind of like the tip of it, and then we go deeper from there to really like dissect it, because it's kind of like when people are afraid of something, helping them like realize that it's not so scary, and is doable and is financially sustainable for them. That's when you kind of can break through, and you get these sort of dreamers of who want to own a home someday, actually show them that it is possible and show them a path to get there. Like that it's a huge challenge, and that's the biggest thing we're dealing with right now, it seems like.
Yeah. Are you seeing like buyers come in with massive down payments, getting help from families, or people Yeah, I mean, you mentioned like trade up, trade down, better school district, like already realizing the rewards of owning real estate, the appreciation over the years, and being able to put more money down and be able to like stay competitive and keep their loans down? Or is it first time home buyers that you're seeing a lot more of?
So yeah, like yes, I think that there is a little bit more of people asking for help from family for down payments, because if you bolster your down payment, you're borrowing less money and the payments will be a little bit lower. And then, yeah, I mean, it's for people that are first time home buyers, it's even trickier because they're not accustomed to carrying a mortgage payment, and their housing payment might be doubling or tripling to buy a home. And so it's sort of like, in those initial kind of buyer consultations, when I'm talking to someone for the first time who's trying to get pre-approved and trying to figure out what they can afford, they're sort of what they can actually qualify for, what the bank or lender will give them. And then it's how much do they actually feel like they can carry in terms of a monthly payment, and like it's not have to live paycheck to paycheck. And so it's a bit of a
Yeah.
balancing act that we do. And sometimes it's sort of reverse engineering their budget. People will come to me saying, okay, like we'll decide that we feel comfortable with a monthly payment of $8,000 or $10,000 a month, and then we figure out how do we get you to a price range where you can find a home that you love and you're not just settling, but we're also keeping your payments in your comfort zone.
Yeah. You reverse engineer the payment, but also, in working with you in the past, you like ask them a little bit deeper questions like, what are your plans for this house? Like, do you plan to be in it for 5 to 7 years? Is this your forever home?
Yeah.
And then really like finding a product that'll work versus, there's everybody gets so hung up on the 30 year fixed and what rates are doing. And I think there's a herd mentality around high interest rates.
Yeah.
But
Well, one
yeah,
one quick thing to add to that too, Nash, is like our jobs as loan officers have become so much more complex, like than just being sort of a glorified order taker, where a client comes to us says we want to get pre-approved up to 1.5 million. We have 20% down. What's your best rate today? Like now we're going so much deeper where we're having to, not having to, like really to be a good advisor to them. It's more about kind of digging into their financials and talking about, are there any, like beyond just affordability, right? And reverse engineering price range. It's also, do you have any, like, is anything coming up in the near future in the next few years for you that might change your financial situation? So
yeah,
that's a question I'm asking everyone, because sometimes it's like really common one is childcare costs. Like someone will have, you know, kids, I have a couple, and
few. Just a few.
and so like if you have a 2-year-old and 4-year-old and you're paying $4,000 a month in childcare and you're trying to buy a house today, in a couple years when those kids are in first grade or kindergarten, all of a sudden those childcare costs disappear. And that's something that a lot of people don't think about, is like, hey, let's just, like, we can buy this house today, things will be a little like skinnier for a couple years, but then when our kids are in school, all of a sudden we get this, all of a sudden affordability becomes, well, becomes more affordable, right? It feels more
Yeah,
comfortable. So, or like they have $1,000 car payment that's going to be done in a year and a half that they're not thinking about. And so, or they have, someone is doing really well in their career and they're expecting a significant pay raise next year, or they have RSUs vesting that they haven't thought about. So it's really like a lot of people think very near term, like, okay, I'm buying this house today. Is the payment going to work for me or not? But like sometimes if things are tighter, think about a few years forward and think about, will it become more comfortable even if rates stay the same? Because that's like a good way to kind of, I think it's something that's often overlooked,
yeah,
and that's something that we can kind of help people open their eyes to.
yeah. No, I love the different angles too. I mean, like I said, I went through the process with you and super happy. I can never refinance, so there's that. But good thing I bought a
Yeah,
duplex.
yeah,
Um,
yeah,
yeah. So with rates being what they are, I mean, I've been telling people that there's a silver lining to high interest rates, right? And I'm kind of curious what you guys are seeing on your end in terms of the lock-in effect. For anybody listening, the lock-in effect is essentially people who um, bought a house, during COVID and got a sub 3% interest rate. They're not eager to let go of that and purchase another house at 6.5, 7%. So, turning the corner on the election and going into 2025? Are you seeing more people? Are you seeing any pent up buyer demand or more people coming into the market being more open to a 6.5% rate because they're hopeful rates are going to come down, or is it still pretty cutthroat over in the lending world?
You know, it seems to me like people are getting coached up and more people are like buying into the fact that if rates are higher, prices are a little bit lower.
Yeah,
It's not like a direct like correlation there, but it's certainly an indirect correlation. If rates are higher, everyone's affordability gets restricted and homes don't sell for quite as much. And so, you know, for a while, I know in the industry, a lot of realtors and loan officers were saying, you know, like date the rate, marry the house, and that kind of stuff. And I think we've got to be a little bit careful saying those things because we don't necessarily know mortgage rates are going to go down. We are expecting to see a little bit of easing in rates. You know, with inflation probably coming down this year, oil prices potentially coming down this year. All that will be good for mortgages, but you know, when people ask me like, okay, in your crystal ball, what does it look like for rates later this year? I usually tell them that I think in a worst case scenario, we're kind of flat, and in a best case scenario, maybe we're improving by 0.5% to a full percent in rate. So you shouldn't be budgeting around a refinance that your lender is promising you, your realtor is promising you in the future. That's like icing on the cake. If rates go down, you're able to refinance, great, but like you can't build your purchase plan around the hope that mortgage rates will go down, you know?
yeah.
Um, so I don't know if that answers your question.
No, it does. I mean, it's like I'm always looking for insights, and nobody has a crystal ball or a correct
I
one.
do. It just doesn't work very well, Nash,
Yeah.
you know?
That, and I mean to that point, you know, if and when rates go down to 1.25%, like that's going to be negated by any sort of appreciation when buyers flood the market because rates hit 5%. Like, I think um, I think there's a silver lining to rates being what they are, and
Yeah.
some great ways that you guys have uh, to take advantage of like rates being high. Can you like share with the audience or the listeners like a few creative strategies that you guys have used in the past just to keep payments low in the near term, or like just debunk any myths that people have about diving into the housing market because they feel like, I don't know, PMI is going to be too much, or they have to save
Yeah.
up 20% down to buy, you know what I mean?
Yeah, yeah. Well, I mean, so part like one some of the tricks that we use, tricks is not really the right word. Let's call them strategies that we use to help people, because a lot of it is like, how do I get the home that I want with a payment that I also can afford, right? And
Yeah.
so sometimes we use things like temporary rate buy downs, which I think are often overlooked and kind of widely misunderstood. That's a great one for first time home buyers, especially, but we've got jumbo options for those too. Like essentially at a high level, how it works is if you're trying to buy, say, a home for $1 million and your payment would be, you know, $6,500 a month, with a regular 30-year fixed rate mortgage. With a temporary rate buy down, your payment might be $5,100 your first year and $5,700 your second year. And then it goes back up to $6,500 in year three and forever. Unless you refinance, it'll go lower. But like a strategy like that is you can use temporary rate buy downs when it's not super competitive. You're not bidding against 10 other offers. Maybe it's a couple other offers, but I mean, we've done 4 or 5 of them in the last 6 months that I've been here. So in today's environment with higher rates, there is less competition. And so if it's a good fit for the buyer and it's a good fit for the house that they want, a temporary rate buy down is an awesome way to keep your payments low temporarily. And like the right type of buyer for that product is someone who does have, who will, their financial situation will be improving either with monthly costs going down over time, like I kind of touched on before, or
Mhm.
someone's getting a raise, or someone's on maternity leave right now, it's going back to work later. You know, if their income is increasing or their costs are going down or a combination of both, that's like a perfect candidate where with this program is great because it allows you to get in the house you want today, keep your payments low temporarily, and just buy yourself enough time to where you're making more money or affordability is better because debts have dropped off. Um, So that's a good one. Interest only loans are out there, and we use them sometimes. Depends on the buyer and the scenario, but that's a way to keep the payments a little bit lower as well, and still let the house work for you as a financial investment to build wealth. I honestly like the temporary rate buy downs more though, because there's no like variability or unknown there. It's just like the rate is this for year one, it's this for year two, it's this for year three, and forever. And the only thing that'll change is if you refinance it. So there's just like, it's really predictable and it's fairly easy to explain. Um, and
Yeah.
so that's a really good one for first time home buyers for, again, the right profile of buyer.
Yeah.
And there's also too, like one other one, sorry, and I'll stop talking on this topic, but there's also first time homebuyer programs out there for like low to moderate income census tracts. And so like I've got a client actually just got into contract in Concord, California, which is near Walnut Creek in the East Bay, and there's a little pocket up there that qualifies as one of these census tracts for us. And so they're getting a below market rate, and they're getting $6,000 for free for their closing costs through this program. So Oakland and like San Leandro is a big pocket where this program also applies. So there's first time homebuyer programs out there, especially in those low to moderate income census tracts where average household median income is lower. And those are great programs to help people get better deals on houses and keep payments under control.
Yeah. Especially if you like free money, because that's essentially what it is.
Yeah, it is. It's not like a loan. It's like a true. It's a grant. It's free
Yeah.
money. So
So I
yeah,
personally, if I was buying a house today and I had 20% down, an interest only loan would be what I would consider, because, people get so asphyxiated on like a 30-year fixed mortgage because they know it's not going to change, right? But
yeah.
I think with interest only loans, the average first time home buyer is going to be in that house for likely 5 to 7 years, and then either sell or refinance in 5 to 7 years. A lot of runway to refi. So anyway, that's my advice for anybody listening who like talking about interest only loans. Like, there are other options out there aside from a 30-year fixed mortgage that I'm sure you get calls all the time. It's like, hey, what are your rates? And there's so much more that goes into that question than like, I can tell you what my rate for a 30-year fixed mortgage is, but let's dive deeper.
But and the lowest rate is not always the best choice for you too. That's the thing. It's more about solutioning for what you need. Like so if you find the lender with the lowest rate, they may not have creative loan programs. They may not be well equipped or have the experience to walk someone through and really understand their financials and how to strategize and put them in the right loan program. So
Yeah. Yeah.
it's like picking a doctor like based on who has the lowest copay, not who actually is going to help you. So, you're right about interest only loans. They are really widely misunderstood, and the house as a financial asset is going to appreciate at the same rate for you, whether you're paying down the principal balance or not. So, that's another sort of tool you can use if you're planning to own that house for 5 years or 7 years and then going to sell it. It's actually something that is a pretty interesting option for some people.
No, totally. So I guess like uh, something else that a lot of people don't think about when applying for loans is like how criteria for underwriting could change. Can you take us through like advice for a first time home buyer who's trying to navigate financing? And, you know, I just remember this question comes up because you rewind the clocks back to COVID and rates were 2.5%. Like, it wasn't super easy to get a mortgage back then with all the layoffs going on and instability in like the tech sector and working from home and whatnot. So, you got any advice out there for anyone who's trying to like not navigate financing for the first time and get teed up and ready to buy a house?
There's nothing necessarily like specific about today's market that is very different than how it's been over the last 10, 15 years in terms of getting a mortgage. Like, sure, there was some little nuanced stuff that happened during COVID where if you were a small business owner, for instance, it was definitely more difficult to get a loan during those times. But in today's market, honestly, like my best advice for someone who's trying to get approved for a loan is just ask lots of questions and don't make assumptions about what's possible and not possible or good or bad.
Yeah.
Just be honest and transparent with your lender, lay everything out there for them, follow their lead in the questions that they're asking, tell them everything and tell them about your goals and what you want, what the ideal situation looks like for you. And then if they're good, they can kind of, grab your hand and pull you in the right direction in terms of finding the right, best product, best loan options out there. And like there's always the stuff like don't try and cause damage to your credit. Like don't have a billion lenders run your credit. Don't go buy cars and kind of frivolous things.
Yeah.
Because those will potentially impact your ability to get a loan near term. So, but yeah, and just early planning too. Like talk to a lender even a year or two before you intend to buy, just to kind of get a sense of where you're at and where you need to be.
No, I love that. All right, so what can you tell me about like the
I could, I
last
Go ahead.
slam? I
Sorry.
was gonna say the tell me about like the last slam dunk deal that you did that just like stands out as a huge win for one of your clients.
Like one of the big challenges we are going to see is it's going to get harder for people to buy their next house before selling their existing. And so products like a bridge loan are going to become higher in demand. And so you've got to like make sure you understand what those options look like and you're talking to lenders that have those types of products because like during COVID, when you had someone who owned a house, they were trying to buy their next home and the rate was 3%, it was easy for them to qualify. It was not hard. But like in today's environment, like if you have a $5,000 mortgage and you're trying to qualify for a $1.5 million house, like even with just like normal, if you don't have much debt, like you as a couple, you need to make about $400,000 to qualify annually to qualify for that mortgage. And a lot of people don't make that. Like that's quite a bit of money, right? And so like it just like because rates are double today where they were during the pandemic, those people that are being forced to buy a new home with the higher rates, a lot of them are going to be surprised that like, oh shit, it's a lot harder to qualify than I thought, and I need an alternative product.
Can you just debunk some myths or questions that you field about like very frequently about mortgages?
Yeah. So like, I think I think one of the common myths is about like how much down payment do I need for a house, and people make assumptions about maybe I need 20%, and there are programs out there that goes commonly as low as 5% and for some loan programs 3% or 0%, and so like I think people naturally will restrict themselves making assumptions about I only need X amount for down payment or like one purchase we did a few months ago, we had a couple that was living down in LA, and they found their dream home in Pleasant Hill, which is near Walnut Creek in East Bay. They wanted to buy it, but they didn't have any money for down payment. Their money was trapped in the equity in their current home, and they had like $500,000 or $600,000 of equity in their house in LA. They wanted to buy this home first, and the sellers needed a quick offer, otherwise they were going to sell it to someone else. And they didn't realize that you can actually use a home equity line of credit with some lenders to tap into that equity and free up that money for your down payment, and then use that money actually for your down payment to buy a new house. And when I told them about that, they got super excited, and we got them pre-approved and made an offer, and they got the house. And what we ended up doing was using that HELOC for the down payment. They were able to buy the new house first, and then a couple months later, they listed their home in LA for sale and sold it. And even beyond the down payment, that same couple, they had a combined annual income of about $300,000 per year, and they were
Mm-hmm.
buying a $1.3 million house in Pleasant Hill. They wouldn't have been able to qualify to buy that new home because of their debt to income ratio would be too high because they had a mortgage payment on their current home in LA, plus the new mortgage payment they were trying to qualify for their new home. And with conventional underwriting, they wouldn't be able to qualify. So that's kind of another thing I think we're going to face in this upcoming year where people are trying to buy that next home. They're going to need creative products to make that happen, and we have a product here at New American Funding where we can exclude the debt on the departing resident, so that housing payment that they had in LA, we don't have to count that because we know they're going to sell it, and that makes it a lot easier for them, and that made that ultimately possible for them to buy their next house first. So a lot of people think about bridge financing for that kind of thing, and I think there's going to be more demand for bridge financing and alternative solutions out there with current market conditions and people trying to buy their next home before they're selling their existing, because ultimately going non-contingent is the best way, to present a really strong offer and get your offer accepted. And that's the kind of stuff that we can do to help buyers who are thinking about moving in 2025.
So they use the HELOC to pull equity out of their current residence, and you guys closed it. Like those usually take like 30 days or so?
Yeah, so we've got a proprietary product at New American Funding that's it's self-serviced and it's lightning fast. It's all data driven and AI driven, and it's start to finish 14 days and you're done.
That's
So that's kind of a cool use case for it, is when you need the money quick. That's a great product to use to get that cash for your down payment.
interesting. Okay,
Yeah.
very cool. Not to take up too much more of your time, but any more advice you could share with buyers going into 2025? Like I said, affordability is just like one major challenge right now. A lot of people think the market's going to crash. I think we both don't believe that's going to happen anytime soon. But
Yeah.
again, no one has a crystal ball. Uh, so, like, any more advice you can give to people listening, or best and worst financial move a buyer can make in getting ready to purchase a house, aside from analysis paralysis, and I'm sure you deal with all the time as well.
I think that just be open-minded and focus on buying a home in a great area, in an area that is going to go up in value. Like they say, like, well, I don't think this is an actual saying, but I say it. It's like buy the crappiest house on the nicest block. Like that's really
Yeah.
a good mantra, honestly, because you can always invest money to improve the house and make it better and make it worth more. So just find something that's got good bones in an area that you want to live in, and you can always build it up and make it however you want it to make it nicer. I'm trying to move my head to block these people behind me here. And so that's one piece. And then also too, like, be open-minded when you're talking to your lender about your financing. Like, just, I think people get so tunnel visioned on what is and isn't possible, and they have these limiting beliefs about, well, we only make $300,000 a year, or $400,000 a year, or 200 or $100,000 a year, and we can only afford so much. Well, how did you arrive at that conclusion of how much you can actually afford? Are you thinking about these other things? Because I think, like, I find probably 80% of the time when I have that conversation with people and I'm just asking them questions and kind of really like peeling back the onion, that we oftentimes find some stuff that they're overthinking or not thinking about in the right way, because mortgage is like a really complex thing. I mean, we delve into, like, basically people's very deep into people's financials, and it can, not that we like cross over out of our lane, but like, I'm not a financial advisor, I'm not a financial planner, would never pretend to be, but at the same time too, like, they are making a huge financial decision, and they all, like, just oftentimes aren't thinking about things correctly or the right way, or like looking at it through the right lens. So just like, level yourself up by working with someone who's really experienced and understands affordability, and how to make a well-informed decision on price range. Because sometimes, like, that extra, I'm sure you see it, Nash, where you're working with a buyer, and if they were just willing to go up another $30,000 or $50,000 in their, or $100,000 in their budget, it would get them that amazing home that they want. But they're just like, they're digging their heels in, they don't want to go there. But if we can show them that, like, hey, it's okay because of X, Y, and Z, and maybe some of the assumptions that you're making are actually, you know not fair assumptions, then all of a sudden, like, we're not forcing them into a price range and a budget that's not going to work for them, but sometimes they make their own assumptions and they're wrong. And it's our job to kind of, like, ask those questions, open their eyes, and see what is possible, really. So yeah,
Yeah.
so that's my long long-winded answer to that question, but it's really like, talk to 3 lenders at least, talk to a bank, talk to a non-bank, talk to a broker, and just like go with someone who you think really knows their stuff because it can make all the difference.
Yeah, man, and that's why I had you on here, which and I appreciate that because one thing that you said that like sparked this in my mind is like whenever people are buying a house and it feels like they got to go up 30, 50K on their purchase price on offer day, like it can feel like a lot. And I think our friend Jason Mitchell told me is like it always feels like you're overpaying for a house, but then 5 years go by and it would is often one of the best financial decisions that people make, right?
Yeah,
So
exactly right.
yeah, man. So hey, while I got you, how can people get a hold of you? What's the best way to get in touch with Matt Sharp? Kung Fu
Um,
Lafayette class?
yeah. Like, I mean, really, you want the honest answer is,
Yeah.
you can text, call, email. That's the best way to reach me. And I don't know if there's a way to like drop my information. Maybe we can drop my contact information in,
Oh,
wherever this is going. We can drop it somewhere, Nash.
we will for sure.
But yeah, I've got 3 kids at home. Nash thinks it's 10. It's actually 3. And my weekends are busy with coaching soccer and chasing around at sporting events and stuff. But like I've got my phone on me all the time, and I pick up my phone often on the weekends and in the evenings when clients need it. So I'm not like tied to a bank branch where I'm only available Monday through Friday till 5 p.m. Like so. Um,
So on that note, I want to share this funny story that we had on one of the deals that we did. I remember it was our friend Deborah who was buying a house out in Santa Fe, and you were coming back from Hawaii.
yeah, I
And
remember. Yeah.
yeah, anyone that this is just a tribute for like how hard you can work. You were actually on a plane at the time trying to get a hold of this listing agent to like give her confidence in her offer and who you are as a lender. But I just remember like you're like, dude, I'm on a plane in Hawaii. I can't really talk on the phone, but I can text with her. So
Yeah.
all that to say, you're not hard to get a hold of, especially like even when you're flying back from vacation with your
Yeah,
10
I mean
kids.
when it's like crunch time and we really need something done for sure. I remember
Yeah.
that though. I was like trying to connect to the Wi-Fi in the plane and texting the agent, "Hey, I'm 30,000 feet in the air right now, but here the answer to your questions. I'll be on the
Yeah.
ground in 4 hours."
Yeah. Deborah's solid.
Yeah.
Looking forward to working with you. That's
Well,
fun.
I was in Park City this last weekend with my kids, and sure enough, I had a client go into contract, and I was out to dinner with my friends, having an adult dinner while kids were being watched, and had to step away and pretend like I was going for a long bathroom break
Yeah.
to
Yeah. Yeah.
jump on the phone with the agents for a couple seconds just to clarify a few things we get the deal done. So, if I'm in the middle of drinking margaritas at dinner with my buddies, or or on a plane.
That's the mark of a
Um,
good lender. Like,
well, it's just I care, I just like I don't want to leave someone hanging, and and a lot of times too in those like kind of critical situations, you're this close to getting your offer accepted, and you just need someone to be there and like answer their phone and advocate for you. So,
yeah.
um, yeah, yeah,
Cool, man.
um,
Well, I really appreciate you taking the time today. And for all your listeners out there, like I'll list your information in the comments section so they can get a hold of you easy. And um, if you got questions or want a good lender, Matt Sharp is your guy. Again, he did the mortgage on my house that I'm super happy with. Never going to refinance. And tune in for a few more episodes coming up on affordability. I'm going to have my buddy Stephen Klein talking about insurance, praying for LA and everybody affected by the fires. I know that you mentioned you had some clients down there, and we're praying for you up here in Northern Cal.
yeah. Thanks, Nash. Thanks for having me, man. See ya.
Thanks, Matt.